have surged to a record high, surpassing $3,100 per ounce on Monday. This remarkable rally is largely driven by concerns about potential inflation linked to US tariffs, setting gold up for its strongest quarter since 1986. Investors continue to flock to gold as a safe haven asset amid economic uncertainties. If you're new here, welcome to DAYTOPIA Wealth and Research, where we transform your everyday news into financial opportunities. My name is Dr. Awosunya Yusuf. I'm a financial advisor and a chartered accountant for over a decade. Kindly subscribe and follow our page to stay updated. Now let's go into the market update. Gold has gained around 18% so far this year, following a 27% rise last year. The increase is attributed to several factors, including a favorable monetary policy environment, robust central bank buying, and widespread investor interest. Now, gold's relative strength index, which is known as the RSI, is above 77, indicating that the market is overbought. However, analysts note that the momentum continues to drive prices higher despite the traditional technical indicators. A key driver of the bull run is the anxiety surrounding potential US tariffs, particularly on automobiles. Commodity strategies have highlighted that the fear of growth constraints and lower economic outcomes from tariffs is pushing investors towards gold. They predict that gold prices could reach $3,500 this time next year, reflecting continued geopolitical and economic uncertainties. Now, let's go into the financial opportunities. With gold prices continuously breaking records, it remains a preferred investment for those seeking stability during economic uncertainties. Investors may consider allocating more capital towards gold ETFs or physical gold to hedge against inflation and geopolitical risk. The second one is diverse investment strategies such as short-term trading, so leveraging gold's volatility through futures or ETFs. The second one is long-term investment, so holding bullion or gold-related assets for gradual appreciation. And the last one is hedging strategy, which means incorporating gold to balance risk from traditional assets affected by economic downturns. Thank you very much and see you next week.